Welcome back. You're watching Trade of the Week with me, Zinati Kuma, and today we bring you a technical analysis on Remgro, BHP, and a long-term outlook on the rand's performance against the US dollar. And join me for that is founder of Herenya Capital, Petri Redelinghuys. Thank you so much for your time, Petri. Let's start off with you going long on the US dollar versus ZAR. Does that mean you're going long on the dollar?
Well, yeah, okay, so this is a bit of a confusion here, I guess. So what it means is we're looking for rand weakness. So
yes.
Long the dollar, short the rand. Yes,
yeah.
In fact. And again, I think, I suppose we'll skip around a little bit again. I think what's important to remember as we're heading into this elections period, let's not trade too emotionally, and we keep our eyes on the charts, right?
And actually, I mean, I'm quite surprised that you're going long dollar, short rand, because we've actually seen quite nice strength coming through to the rand in the last 2 weeks.
We have. In the last, about a month or so, we've seen really decent strength in the rand, actually. So if we look at the chart on the screen at the moment, what we can see is the rand has basically been trading in a bit of a range, right? Right now we're at the bottom of the range, so thinking in probabilities, probabilistically speaking, the rand is very likely to trade back to the upper end of this range. We saw some of the trades we did in the past, first rand, for example, as an example. I'll just draw that up.
Yeah.
It's one of these examples where we essentially said, look, we're looking for this range, trade back to the top of the range. So essentially what we're doing is we're doing essentially the same thing here with the rand. So we've got what's a really very high probability setup for us, or a very high risk reward setup for us, where we can say that if the rand sort of dips to this 1901 or 1801 level, or let's say below 18 rand, you can stop out with a target price of 19 rand 20. So it's a very high risk reward ratio trade. I mean, we're looking at a 1 to 6.5 risk reward there, which is fantastic in our book, and it's the kind of trade that we want to take. So, you know, 50-50 chance that you stop out, but on the 50 chance that you do well, you make 6 times as much as what you lose.
Yeah.
So this is the type of trade that we look for, you know, at our desk at least, and it seems to be a nice, safe range trade.
Okay. Are you factoring in any kind of fundamentals, elections, or is it just purely technical?
I mean, I would be lying if I said that I wasn't factoring in at all any wobbliness heading into the election. Yeah. We saw that, I don't know, I think that there might be a little bit of fear coming into the market over the next week or so. I do think it's important to note that we shouldn't let that dictate our choices, right? Primarily, this is a technical trade. This is a support level that we've seen has held over a space of more than a year now, since essentially November 2023. This has been a very strong support level. It did break below briefly during sort of the July-August period last year, but you know, other than that, it's been a fairly solid support level for a long time. And I think that we, you know, if we think in probabilities here, the chart dictates that we probably trade up to the top end of the range again. And we can say that this is potentially a holding pattern that the market is in while it waits for the election result. So heading into the election, we might see a little bit of wobbliness and a little bit of uneasiness.
And maybe a few comments from Fed officials.
And so on, and that could weaken the currency a little bit. But whether we break out, you know, above 1920 or below 18 rand, I think that's dependent. That's what the election outcome will determine, if that makes sense.
All right. Well, let's get into some of the company technical analysis that you have for us. Remgro is actually quite an interesting one, and you're going long on that. I'm wondering what is supporting your choice there, because there's been this narrative that Remgro has been underperforming for years. There's also that widening discount that it trades at about almost 50%, which is really big. And, you know, there was a little bit of wobbliness, a kind of mixed bag that you saw in their last results that they reported, where there's also this kind of concern that maybe they're not doing enough to unlock value for shareholders. Are you maybe trading on maybe speculation that something interesting might happen there?
No. I think it's, again, so I think my focus this week is really just ignore all the news, ignore all the stuff happening around you.
Ignore all the noise. That's really the
purely
theme,
at the
right?
chart. Yeah. So if we look purely at this chart here, what I've highlighted here is essentially what looks like an inverse head and shoulders pattern to me. So we can move our chart a little bit just so that it's slightly more visible to you. So that looks like a bit of an inverse head and shoulders pattern, at least to us. And from here, you can essentially measure this move out. So if you say you measure the head of this pattern from there to there, that's going to give you your projected target price out. If this pattern plays out, which we believe that it will, obviously. We've taken a long position here, so just a full disclaimer that we have to disclose that. And we're looking at about 137.50 Rand as a potential target price, potentially even all the way up to this 200-day moving average, which is about 145 Rand. So again, here we have a decent risk-reward trade. And we are taking a trend reversal trade here. Yes, we're trading against the trend, essentially. But we're trading a pattern that we know has about an 89% success rate. So it doesn't always work, but almost 9 times out of 10, it does play out to target. So we feel this is a fairly safe trade as well.
Yeah. Do you think it's too cheap at the moment?
I think all of South Africa is too cheap at the moment, to be honest with you. I think we've said this a few times, we're a nation of extremes. We can become extremely negative when things don't necessarily go all that well. And I think that, we've been through an extremely tough time and we've been very much overlooked by the outside world. And most importantly, we've been overlooked by our own investors. And I think that there's a lot of value to be found here. So yes, I do think it's too cheap. I
mean, really, Remgro is quite an interesting one because I don't know if this is still the narrative, but, back in its, glory days, it used to be seen as one that you have to have in your portfolio. Do you think that narrative has changed?
I don't think so, no. I think it is one of those very diversified sort of stalwarts that's just going to continue to perform really well. In recent times, it's been under a bit of pressure, yes. But I think that, if you look at the long-term chart here, it's a bit of a dismal picture, really.
Yes.
But I do think that it's something that is, I wouldn't say one of the most important cornerstones of any portfolio at this point, but I do think it's something that deserves a place in your portfolio because it's one of those sort of group of companies, I guess, that's going to be around for a very, very long time still.
Yeah. Do you think also that they maybe just need to do something interesting? You may not be speculating that they could be doing something interesting, but do you think that they could in terms of maybe capital allocation, any share buybacks, maybe to boost up the share price?
I don't know if that's a wise use of capital to buy back stuff. I think it's maybe a better use of capital if you have a lot of spare capital to look for other acquisitions, right?
Yeah.
I think that, to be honest, these guys have been running their business very successfully for a very long time.
Yeah.
For me to sit here and tell them how to do a better job at that, I think is a bit rich, right? I think we need to allow them. We need to trust in their management style and their skills, right? They've got a very long track record of buying successful businesses and running them successfully. So I think we might be a little impatient with it. And yes, it's been a very tough time, and yes, earnings have been under pressure for a lot of their underlying businesses, which is why their share price is where it is. But we do know that the economic cycle is a cycle, and it won't stay this way forever. And regardless of the election outcome, whatever that's excessively positive or excessively negative, we know that that's going to be temporary. Essentially, one of the things that I feel very confident about is that we're going to have some sort of a coalition government, which in a sense creates an environment of policy stability, which means government can leave business alone and business can get on with it, and things will get better from there.
All right. Well, yeah, it's going to be quite interesting to see what we get from Remgro. I did speak to the CEO when they reported their last results, and he admitted that there were some own goals that the company has scored. But of course, we're also waiting for more of growth pillars as well, particularly with the CIVH deal with Vodacom, hoping for a cash injection there, and that the competition authorities will actually approve that. Let's go on to BHP. Pretty big news for the last, month or couple of weeks or so. And you're going long on BHP. Quite interesting because, of course, as we saw, the share price movements with Anglo-American, Amplats and Kumba. What are you seeing there?
So essentially here, I had an interesting discussion with somebody this morning around how do you get exposure to copper? I don't know if you've been following essentially the price of copper, which is trading at basically all-time highs, right? So there's a number of different ways to get access to copper. There's a few interesting ETFs. There's a few smaller cap companies on the JSE. And then there are, the big boys, Billiton, Anglo's, Glencore, those guys, right? Anglo's is a bit touch and go because we don't know, is Billiton going to buy them, are they not? Back and forth. So I was thinking, from a shorter-term trade perspective, Billiton is probably the safer bet here, because if you compare, if we look at, for example, the copper price, not copper. If we look at the copper price, for example, and we just see, for example, there's a good ETF as a measure. That is a very steep trend to try and chase into, right? But then if you look at something like BHP Billiton, it hasn't quite run just that hard as yet. So there's a bit of a lagging effect.
It's quite interesting.
Obviously,
because
it's a diversified miner. It has oil exposure too. And if we've got a bit of a buy signal on the oil price as well, so we're quite bullish on that too. So we think there's a lot of backwinds here for that. Sorry, I interrupted you.
No, I was saying it's quite interesting seeing that the kind of movements that you see on copper don't really filter through to the kind of copper players when we look at the miners, because gold, you kind of have this multiplier effect, for example, where you get this little bit of gains on the gold price and then the miners shoot up. Right? So it's quite interesting, but I guess also you speak about the diversified element of it as well.
Generally, copper miners are more diversified. They're in more than one mineral. Right? So I want to say there's almost a lagging effect where we first have to see the earnings come through in the income statement, and then we go, oh, oopsie, we've missed the bus here. Then the share price adjusts really quickly. So basically what we're doing here with BHP or BHP Group, BHG these days, as the ticker is again trading the range, right? So here we have basically an equidistant channel. There's a little blue stipper lane in the middle here. I don't know if you can really see it. It coincides almost with the 200-day moving average, and we can see that sometimes price kind of gets stuck in this range, the small range. It'll break out to the upper range. But overall, this whole area here is one big range, right? And we're kind of in the middle of the range now. So the probability here, the high probability trade or the highest risk reward trade is no longer available to us. But we can almost say that, look, we can trade this, take this trade, stop below sort of 544 or 540 if you want to give it a bit of breathing room, and see if we can get it out at around 610, 605. And that's going to be a relatively safe trade in our view as well. And, rand weakness is probably going to help this, to be fair.
There are quite a number of miners that are exposed to copper, including Anglo American. Why BHP?
Well, if Anglo American, for example, let's say that BHP in the worst case scenario says, we're no longer interested in buying Anglo American. Anglo American price falls through the floor and BHP shoots through the roof. So that's the downside risk, right? For the Anglo case. And if the deal continues to go through, BHP is going to benefit from that in the long run. So maybe there's a share price adjustment. You'll survive. It won't be as violent as a rug pull out of, well, look, the deal is off. So that's the risk we're trying to avoid at this stage. And yes, if the deal goes through at a higher price, you're going to wish you had Anglos, right? But
I mean, especially considering that they're now trying to be leaner and meaner.
Look, and I think what's going to happen is Anglos is going to probably unload a bunch of things. And in time, the deal will probably eventually go through, but it's going to take months. So the real risk here is that Billiton decides to walk away, and in that scenario, you're going to be very happy as a Billiton long position, right? And very sad as an Anglos long position. So that's just in the short term the risk we're trying to avoid. In the long run, I do think that Anglos probably gets bought out. It probably unbundles a whole bunch of things in the process, and there's probably some opportunity in that. But in the context of what we're trying to do, which is take a short-term trade, I think that Billiton, at least for the next 2 weeks, is probably the best placed trade.
Yeah, interesting also that, you spoke about wanting exposure to a copper miner. There are also quite a lot of exploration ones on the JSE, Copper 360, and I think Orion Minerals. Is there just too much risk there?
Well, it's a bit tough to trade the smaller caps from a liquidity perspective, right? So if you want to take, a relatively sizey position or even a small position, it's sometimes really hard to get out of smaller stocks, right? But, if the spread is like 3 or 4% and you've taken 100,000 Rand trade, you're already down 3 grand just getting into the trade. Now, let's say, for example, the copper price pulls back 10% from the highs, because it could do that at this point. It'd be absolutely normal. And suddenly that, brings a flood of sellers into a small cap. It's not going to be an interesting time. So for at least leverage trading, CFDs and that type of stuff, rather stick with the more liquid stuff, top 40, at least top 50 or top 60 shares in terms of liquidity on the JSE. The JSE has had some problems with liquidity recently, or increasing problems with liquidity. So rather play with the, in the stocks that you think are easy to get in and out of, or that you know are easy to get in and out of. If you are a longer term investor and you think that Copper 360 or Ryan, have something that you like for the next 5 to 10 years, by all means go ahead and buy them. Liquidity is not your issue at that situation. But if you want to be short term trading in and out of stuff, I don't think it's the safest way to do it.
Yeah. And I mean, we've really just been talking about stomaching trading in a time when we're inundated with news of elections. How do you block out the noise?
I don't know. So it is a bit of a skill set, I guess, to learn how to ignore a lot of the panic. I think what we have to remember sometimes is that, news media is driven by sensationalism a lot of the time. He says on a news channel. Sorry about that.
No, we know this. We know this.
But a lot of the time, sensationalist stuff makes the headlines, and it can be sometimes a bit misleading.
Yeah.
So I think it's important during this time to remember the things that make the stocks that you own great, right? The reason that you bought them. If the election outcome is going to be extremely topical, it's going to be extremely emotionally charged. Everybody's, there's a lot of talk about potential flare-ups if this doesn't happen, and potential flare-ups if that doesn't happen. And maybe it happens, maybe it doesn't, who knows? At the end of the day, the things that we know can put the probability of success in our favor is the tools that we know how to use. For example, technical analysis is one such tool that we know that if we just take a statistical or technical analysis approach to stuff, that can block out a lot of the emotional side of the stuff, and we just trade the charts.
Just look at the charts. Yeah. Well, thank you so much for helping us do that, Petri. Really appreciate it. That was founder of Herenya Capital, Petri Redelinghuys.